What's up everybody? What's going on? Boske's FX family. I hope you guys are all doing good and welcome back to Boske's FX YouTube channel. We do appreciate you guys to have you back once again here as well, guys. We'd like to thank you all who just subscribed to our YouTube channel. If you have not yet done so, please kindly hit the subscribe bell and turn on the notification icon so that you will not miss out any new concept from this channel. So guys, in today's video I'm going to share with you the most powerful strategy which you can use on index like US 30 and US 100, which is Nasdaq as well. If you are also new here, we also talk about smart money concept, ICT concept, and order block strategy. If you are looking forward to learn about those concepts, you are most welcome to join the family. So guys, you just have to stay tuned until to the end of this video to understand more about this strategy. So guys, what you have to understand on this index or on this Nasdaq chart we are on, you just have to understand your previous market structure so that you'll be able to anticipate a move to the right side, whereby you'll be saying we are now buying or we are now selling. So what you have to understand, right, you just have to understand that whenever price is going up, we look for this regular market structure. We look for what? Higher highs and higher lows, right? Something like this. This is a regular market structure which everyone knows. And as well, if price is going down to the right side, we look for what? We look for lower what? Lower highs and lower lows, something like this. And as well, price can also continue going down, not coming back to give you a new what? A new lower high. So that's what you have to understand, right? And as you can see, right, you have to understand each and every demand which price will react, right? As you can see, we do have a demand zone area, which is this one. And by the way, this is a weekly time frame. So what you have to understand, right, whenever price comes back to the demand zone area, you want to see a reaction to that demand zone area. As you can see, we did have a lot of these demands, but they were being taken out, right? As you can see, we did have a lot of them, but they were being what? Taken out. So now, as you can see, this one was able to hold the orders, right? It was able to hold the orders, right? And the next thing which you have to understand now, you just have to go to your left side now and then understand the structure here. As you can see, we did have a swing what? A swing high. We also did have a swing low, and anything between a swing high and a swing low, it's a substructure. As you can see, this was our swing high being taken out right there. And now you can see that in this substructure we did have a mitigation of the first candlestick which was being created by the price right at the swing low, and then the price continued going up. We also did have a break of structure in between that swing high and the swing low, and then you can see the price continued going to the upside. So this was a demand zone area which we anticipate a move to see if price will come back and mitigate, but they didn't do that. They just rejected at this zone area, right, making a flippy supply to be a demand zone area right there. And now as you can see, price did come back in future. Price did come back in future, and then you can see they give us a reaction. They firstly created a new higher low. As you can see, the price took out this high of this candlestick, meaning this was a new higher low, but it fails to hold the orders, and then the price come back again to the what? To the demand zone area, but also they failed to take out this demand zone area, and now they have created a new lower low, but it's now a new higher low because the price was able to take out this lower high right here, right? Price was able to take out this lower high right here, as you can see. And now if you go back to your monthly time frame, something like this, guys, what I want you guys to see is that market was taking out all of these opposite candlestick, and then the price managed to hold this one. So what you have to understand now, you are now following where the market structure is going. You are not going to trade against the market structure, right? So as you can see now, we do have a new lower high being taken out, right? And then the price created a new higher high. And remember what you have to understand, right? What you have to understand, whenever price give you a structure like this, right, you have to understand this will now become a break of structure, and the next thing which we anticipate, it's a correction, right? It's a correction. Once we have a correction, want to see a change of character, and then a break of structure for continuation pattern, something like this, and then we anticipate a move until the price goes to the last high, as you can see. So now what you have to understand right here, now let me delete this. What you have to understand now, you have to understand, okay, we do have this lower high being taken out. We also have this lower low being taken out, meaning if we put together, this will now become a break of structure, and then this will now become a change of character, right? And then the next thing you have to understand the price will come back to the demand zone, or to the last candlestick, and then they'll go to the upside, something like this. But also what you have to understand, this may be a liquidity grab whereby the price just came back here, and then the price can also continue go to the downside, something like this, right? So what you have to understand, all right, what you have to understand, you have to understand the previous market structure, so that you'll be able to anticipate a move, as I said. So you can see that the price have been creating new higher lows, and these new higher lows were being taken out. As you can see, this new higher low was being taken out. As you can see, this is a new lower low. So if price if we are highlighting from this zone, you'll be taking from a previous higher low. As you can see, this is a higher low, but it was also being taken out right there. So these are the lower lows now, which price is creating to our right side right here. So as you can see, we did have a demand zone. Price failed to respect that demand zone, but also they did come back to mitigate the last opposite candlestick. And you can see this opposite candlestick just came back as well, to come back to respect this demand zone area, which failed to pick the orders to continue going to the upside. And you can now see that also the price did the same, right? The past few weeks, they just came back to mitigate this failed demand zone right here, filling the orders, and then the price was able to go away to the downside. So now if we are trading in the right market structure, you now go in smaller time frame, because that's where you can also see the market structures, right? You can see that, okay, the price give us a change of character here, but also they failed, right, to hold the orders at this demand, and then the price continued going down. As you can see, we did have a change of character in the break of structure, but it was a liquidity grab. As I said, this can be also a liquidity grab whereby the price just came back to mitigate this one, and then they can continue going to the downside. As you can see in our weekly time frame, right, we do have lower highs and new lower lows. As you can see, let me highlight them, something like this. This is a new lower high, right? Because there's nothing there at the top which we can call a new higher high. So the price was creating new lower highs and new lower lows, something like this. So now let me just delete quickly this. So if we go back to our daily time frame, right, in our daily time frame, the next thing which you have to understand, we can understand that we did have a demand to our to our left side, which is this one right here. We did have a demand right there, guys, as you can see. And also we did have a change of character. You can see we did have a break of structure, change of character, confirm continuation pattern, and then the price continued going to the upside. You can see this was a change of character, and this was a break of structure right here, guys, as you can see. Break of structure, right? Break of structure. So what I want you guys to understand, right? What I want you guys to understand is that now the price have came back to this last demand zone area, which took out this structure right here as well. It did a job which I was looking forward to see, as price have also taken or induced this zone area right here. As you can see, I love to see price coming back to a demand, but firstly what I want to see is the inducement, and they did a inducement now, and now the price is going up right from this demand zone A. So if you go to your H4 time frame, you can see that the price came back inside this breakout structure, right? So this was out of the box, right? So that's why the price came back and do induce that zone A. So the next thing which you anticipate, you want to see price coming back to the last candlestick, which is this one, and then the price did yesterday, they did come back to this last candlestick. And the other thing now which you have to understand, your currently market structure, something like this. Your currently market structure, you can see we did have a breakout structure. This is a change of character, right? But for me, for now, I will not look for long. Why? I want to see this one being taken out first, right? I want to see this one being taken out first, and once price does give me a breakout structure here and comes back here, I can now understand that the price is going up. We'll be looking for a continuous pattern. But as well, guys, if you come back to your daily time frame, this is what you have to understand. Remember, this was a inducement right here, but price coming back to the demand zone A, and this will be your entry point if you are looking for for longs. If price continues going to the upside as well, you have to understand this last opposite candlestick was responsible for taking out this structure. This one was created after the breakout structure, so it's possible that the price can also come back to this zone and then continue going to the downside, right? Because remember, there's a failed order block right there. As you can see, this is a failed demand, and this can be is a flippy supply. So you have to understand the next thing which we want to see for us to confirm this upside going a uptrend. Sorry about that, uptrend. We want to see similar things which happened here. As you can see, we did have a breakout structure below, and also the price went up, give us a change of character and another breakout structure. So this is a continuation pattern which we are anticipating this to the upside. So if they manage to take out this zone, if they do manage to take out this zone, I'll be now anticipating a move to the upside, and this will be my potential take profit, right? This will now become my potential take profit. So if you go to H4 time frame, you can see that okay, price is going up. We also have a change of character because this was a supply zone. It fails to do its job, and now you can see the price is going to the upside. So we like to see if price will take out this zone, and then if they do take out that zone, this supply have to be cleaned out so that I'll be able to look for my trades. So if price continues going up with this bullish momentum and give me a pullback, maybe somewhere here, and then goes up something like this, now the next thing which I will do, I will go in smaller time frame, like 15 minutes time frame, and look for change of character. Then we'll go with them to the upside. And even if you go to 15 minutes time frame, because me, I don't usually use H1 for my entry. I use 15 minutes time frame. So in 15 minutes time from yesterday, if you manage to see that this was a demand zone A, what you are going to do, you are going to understand your what, your left side. And I still remember back then I wanted to see price coming back to this zone right here, because as you can see, this last candlestick was able to take out this zone. So let's see if price came back there. Yeah, they just came near that zone. As you can see, this was a wonderful trade, guys. This was a wonderful trade. Okay, we did have a break or structure right here. This was a break or structure yesterday. Let me zoom in, something like this, right? This was a break or structure, and this was a change of character right here, guys. Change of character. And remember what I have said on my previous video, you just have to understand that the same area, or the same level which you were going to anticipate a buy move, that's the same level which you use as well right here. So here, yes, we did have a supply, which was this one here. So you are going to use this one right here, but though you understand that you also have a demand level right here, guys, something like this. So you see, now it will now always come clean for you to understand how to take trades using the strategy which we are sharing with you here on our YouTube channel. As you can see, price came back there, so you were going to go in a little drawdown, but you can see the price went up. As you can see, they also managed to take out the last lower high right there, as you can see. And now the next thing which you anticipate, as you can see, price is going for this supply right there. You anticipate to see price taking it out, so that you'll be able now to use your fib and understand. If you use your fib something like this, from this low to this high right here, something like this, you now understand you'll be looking for longs around 62, and you also have this failed supply right here, guys, which will now help you to look for your entry for entry zone area. So that's what you have to do, that's what you have to understand. And even though, let me delete everything and show you guys something, guys. As you can see, right, we also shared a Fibonacci tool right here on our YouTube. As you can see, this is our this is our low, this is a high. So if you use this Fibonacci, you are now looking for 62 level entry point. As you can see, the price just came back to 62, below that zone a little bit, and then they continued going up. So that's what you have to understand. All of these strategies, if you put them in order, understand each and every market structure where the price is currently at, you will be able to look for clean trades, right? As you can see now, the price is at this demand zone area. So the next thing, you want to see at least 2 previous supply level being taken out, so that you'll be able to anticipate a move to the right side. That's what you will be waiting for, and you know it will be good for your swing trades or for your day trading, if you are looking for a trade on your daily basis of trading. So that's you. So I hope this video will help you, and thank you for watching, guys.